866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide out this month titled Building Your Emergency Financial Binder. And really, Mike, we're talking about, a set of documents that someone needs in the event that something really bad happens to them. And one of the questions that family members and friends always ask is, who should I call if that happens? And this binder should have that information in it.
Yeah, it's designed to be that one-stop shopping of, hey, what do I go for? Any number of different things that could happen, right? I mean, it could be an accident that lands me in the hospital. It could, unfortunately, be my passing. But you want a consolidated place where loved ones can go to try and find, hey, what are my first points of contact that I should make?
What are those points of contact that should make their way into this binder?
Well, I think importantly, tax preparation, estate planning, and financial advice are three of the big ones that I can think of off the top of my head. The problem is who does that and how spread out it is varies dramatically person to person, right?
Sure.
If I have 5 different bank accounts for different things, that is going to be more complicated than if I have a single bank account at a single place and then an investment advisor that's overseeing all of the investments. But again, your results could vary.
Folks, the guide this month is titled Building Your Emergency Financial Binder, and it has all this information and more in it to make sure that you are leaving a comprehensive guide for what happens if you're going through an emergency. Way to get this guide? Call 800-393-4001, or you can also request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. It's Mike, Marc, and Tucker with you. And I'm sorry I'm giggling. We've got a lot to cover on the show, and this is not breaking news, but Christine Lagarde, the European Central Bank president, is giving an interview with Bloomberg right now. And the headline is so useless, I just can't even avoid talking about it. The economy between baseline and adverse scenario. That could cover nearly any scenario that I can possibly imagine, but thank you, Christine, for that interview. I'm sure that Bloomberg is the one doing a bad job here with this. I'm sure she had something more intelligent to say that the economy is between baseline and adverse. Again, that means almost nothing to me, but I just couldn't help but giggle at that. It's Mike, Marc, and Tucker with you here. I think I already said that, and markets are up. We are in the midst of bank earnings. We have some news out of Fed nominee Kevin Warsh and his move towards a Senate hearing. And then we also crossed a benchmark yesterday that is worth noting on the S&P 500. So we're going to be covering all that and more. But let's talk about that benchmark on the S&P 500 because against all odds, the S&P 500 is now higher than it was when it closed on Friday, February 27th, before the strikes and events in Iran. So on Friday, February 27th, we closed on the S&P 500 at 68, 78, and 88. 6878.88. We closed the day yesterday at 6886.24. So crossing that threshold here where the stock market, again, in spite of higher oil prices and concerns about global shortages of potential goods, the S&P 500 at least now higher than it was on the close of Friday, February 27th, which I just find absolutely fascinating. Obviously, there are still a lot of concerns about what is going on in Iran. Our ability isn't really in question, but willingness to blockade the Strait of Hormuz and what that means for Iran, China. We'll be talking about all of this in length, but important piece to recognize here, because at least in the conversations that I have, folks are still of the mindset, oh, markets must be taking a hit. It's been so volatile, and my response is it really hasn't. Volatile, maybe, you've had a few days where you started down, ended up, and vice versa. But the downturn in markets has been very mild here domestically, pretty mild on other major developed foreign markets as well, and quite optimistic that this will blow over and move into a better place shortly. So we will see where it goes. I want to turn over to bank earnings. We had Goldman Sachs report yesterday. They dropped on their earnings initially about 3%. They're up a little bit today, making back some of those losses. JP Morgan stock in early trading is off 0.25%, and Wells Fargo stock off about 4.5%. High level here, Mark, let's talk about what we did see from the bank earnings, because as we've talked about before, there is not oftentimes a lot to learn about the broader economy or a broader state of things from bank earnings. They are so incredibly nuanced in the way that they account for different items, and the fact that they are, we call them the big banks for a reason. They have so many different business lines that, one can be doing exceptionally well and another might drag it down. But high level, anything that you took away from these major bank, strategically important banks' earnings this quarter?
No.
Good. Okay. So next question.
You knew that was coming. Sorry, I'm not a bank analyst. I'm sure an analyst in this sector would have a million very boring things to say about it.
Yeah.
But,
so high level here, JP Morgan's earnings reported a profit of $16.5 billion. That was better than consensus. Over at JP, the revenue came in 10% higher, again, surpassing forecasts, which we talk about this like it's some big surprise. Companies almost always beat their earnings projections. Investment banking fees were a big piece of JP Morgan's overall story. And again, so therefore the stock, you would think, oh, through the roof. No, it's down 0.25%. Wells Fargo, whose stock is down quite a bit, they reported earnings of $1.60 a share, just barely beating their analyst estimates of $1.58. Revenue was up only 6% year over year, and that missed expectations. So that would likely be a key driver of what's causing concern there. And their provisions for credit losses rose 21% to $1.14 billion. I think if there's one thing that I'm willing to highlight about these three major banks who have reported so far, it's that all of them, some more than others, but all of them are taking future loan loss provisions, meaning they're worried about some of their loans souring, and the dollar amounts that they're talking about are the highest now that you've seen since COVID. They are well below where they were during COVID, but they're the highest levels we've seen since that point in time when everyone was worried about all sorts of customers failing and defaulting on their loans. And so I think that's worth noting. I'll also say that just because they're taking the loan losses now does not mean that they will actually occur. This happened during COVID. I'm sure, Mark, you even not being a bank analyst remember it. They had a bunch of loan loss provisions taken out in the first 2 quarters of the year. And then as every company out there got flooded with cash from the United States government, those losses did not occur, and they slowly, booked them back onto their accounting in the end of 2020 and beginning of 2021. So we will see where this goes, but I think it's worth noting at least that the assumptions for losses on their book of loans is the highest that it's been since that period of time. That's about all I've got on bank earnings.
Yeah, overall, earnings are expected to be up about 13% year over year for Q1. We're getting
For all earnings.
Yeah. I'm sorry. I'm talking the entire S&P 500. Stocks are up over the same period, about 30%. They've been flat for a while. Stocks are flat on the year, and haven't moved much since last fall. The combination of those two things, or the upshot, the result of those two things, is that valuations have come down somewhat. The price per unit of earnings, so-called PE ratio, no matter how you want to measure it. And that's not necessarily a bad thing. It may be frustrating that stocks have seemingly been running in place. But if this is how valuations become somewhat more reasonable relative to
that'd be a hell of a way for it to happen.
Yeah, it's never happened before, but that would be a very welcome outcome.
The U.S. oil blockade has entered its second day now and hasn't been heavily tested. We just talk about these things when it comes to U.S. military as though it's a foregone conclusion. I was reminded of just how difficult an oil blockade a ship blockade actually is when you talk about the Strait here. You actually have to have the willingness to cut off a moving vessel and then board it and prevent it from leaving. And so it has not been thoroughly tested how willing the U.S. military is to do that, but we are saying that we are, and we will see what happens here. In the meantime, you have a few different countries and organizations warning about the shortages of different refined products. In Australia, there have been a few regional areas that have reported shortages of diesel fuel, just an inability to get their hands on it in certain areas of the country. And a group of European airlines has warned regulators there that should product not flow within the next 3 weeks, then they would expect jet fuel shortages, and begging the European government to do something about that if things do not move along in the next 3 weeks. I'll also say that if you are a European airline industry group, you are probably going to have some pretty dramatic forecasts about what could happen here in order to incentivize something to happen. So, we will see. I think so far where you've seen the first signs of real problems have been in developing nations across Southeast Asia that are experiencing fuel shortages and massive swings in prices. And I expect that in those same places is where you will see issues with airlines, bankruptcies, et cetera, before others. So that's the state of things across the Middle East. This might be the shortest time we spend on this subject of Iran since the war broke out, because quite honestly, this is just one of those few times where it seems like there's a real incentive for negotiations to happen on the United States side. There is not an immense amount of new news coming out of there, and until we see either the shortage issue get worse or more discussion on negotiations either breaking down or succeeding, I don't know that I have much else to say about it.
Now, spot prices are coming down a lot. Oil's down about 5% today, and front-end futures prices, or near-term futures prices, June, July, coming down, but less so. So there seems to be less panic buying,
Indeed.
Which suggests that markets are reading into this probably exactly what should be read into the current state of things, which is the U.S. wants to wrap this up.
Let's take a quick break. When we come back, we talked a bit about it yesterday, but I don't think I did the subject justice. The Wall Street Journal attempted to measure who had it tougher financially, boomers versus millennials. This age-old question of these generations butting heads and blaming each other for the world's problems. We're talking about boomers versus millennials next on the Financial Exchange.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
Remember, you can watch the show live every day on our YouTube page while breaking business news, and all of our content is also archived. So if you want to go back and see a discussion about a specific topic, it's all there with the click of a button. Just search the Financial Exchange on YouTube and be sure to hit that subscribe button.
All right, Mark, we were talking before the break about the never-ending debate of who had it tougher, the millennials or the boomers. The millennials came of age during the Great Recession, had to raise young children through the COVID shutdowns. The baby boomers were, their first years in the labor market were sometimes defined by the oil crisis and very high interest rates, making housing costs quite expensive. I will once again make the point that I did yesterday, which is we can talk about this from a purely financial and cost of living and economic sense. I will throw out the opinion that I have, which is that's all irrelevant when you consider the fact that 40% of baby boomer males served in the military compared to only 4% of millennials, and there was a draft in Vietnam, and I think all of those factors are far more relevant to the real having it harder conversation. But the Wall Street Journal is trying to talk about something else, which is a real conversation about financial factors. So let's dig in there, Mark, and you can start wherever you want. You can start with your conclusion first or your data points first. Where would you go on when trying to answer this question of who has it financially easier or harder, the millennials versus the boomers?
Well, it depends on how you want to define that. I mean, if it's strictly home ownership, which is a very conspicuous and inflammatory, I guess you could say, issue, well, homes were more affordable. If it's say
For boomers.
for boomers, thank you.
Yep.
I'll just say in the earlier period versus the later period.
Even when you factor in interest rates?
In terms of carrying the cost, I'm just defining that as how many times median income, home prices as a multiple of median income. There are other ways, as the article illustrates, of defining that, but rates would have been on average in the 70s and 80s higher, in the 90s lower. Yep. So
depends when you bought your home.
Yeah, and if you refinanced. Yep. And I don't think their calculations were that sophisticated, were like dynamic. I don't.
Pretty tough to do that.
So let's just call that a slight edge to the earlier period of home affordability. Stock returns were much higher in the earlier period. In the 80s and 90s, they averaged 17%. That's just an arithmetic average, simple average. And since the turn of the millennium, they've averaged about 10%. So it was easier to build wealth if you were investing in the stock market in the earlier period.
How much have they averaged since 2010?
Since 2010? Oh, yeah, I'm thinking, millennials were not active. Let's see, just a simple average.
So difficult to calculate.
14.8 is
So a similar type of situation to the 80s and 90s.
Yeah, slight edge for the earlier period.
Yep.
So just strictly using those sort of dry measures, you could give a slight edge to the earlier period.
So one piece that I think everyone is probably screaming at from home if they're a millennial, the cost of college tuition and fees is up about 1,500% since 1980.
Yeah, there's been a lot of inflation there, sure.
So if you view that as a necessity to get a good job, which a lot of Americans do, if you view the steps of the government in terms of pushing I don't want to say they push student loans, but guaranteeing student loans and setting that program up as problematic, then a lot more millennials are going to be debt laden because of their education than baby boomers were. I think every baby boomer is out there screaming, well, that was a choice, and that's also true, although it was a choice made by a 17-year-old, so what the hell do they know? So that is a very reasonable point to make. I would measure it in one other way here, which is millennials' average net worth by around age 35 exceeds that of baby boomers at the same time, even when adjusted for inflation. So, I mean, again, a lot to say about averages, but when you add in home equity plus everything else that you have here, the average millennial's net worth, according to data from Federal Reserve, now exceeds that of baby boomers when they reach the same age. The baby boomers, obviously, today have now far exceeded that because their home price appreciation over the last 6 years and stock market appreciation over the last 15, the head start that they had at that point, baby boomers now represent about a half of the total net worth of the United States. So, we can talk about where it's gone since then, but by the mid-30s, the millennials actually had more average net worth than the average baby boomer. So, I don't know, even when I look at the financial data here, I think the biggest piece in favor of arguing that millennials had it harder was clearly the cost of education and cost of things generally, but education is the big one that I can point to. When I look at things like shelter costs, food costs, other major expenses, are they up substantially? Yes. Are they up way more than real incomes? No. They're about in line with those other items.
I think you'd have to really have blinders on to make the argument that life was somehow better in the 70s, 80s, and 90s. Many diseases were a death sentence, air conditioning indoors was not uncommon, but not as pervasive as it is today. It's easier and cheaper to get healthy foods. And maybe part of this doesn't jump out of the data. You have to have lived. I'll be 54 this year, so I sort of straddle both.
Yep.
I remember the 70s, 80s, and certainly the 90s. And the 80s as well. They're pretty vivid, too. Anyone who would claim that people had it easier then than today doesn't know what they're talking about.
Yeah.
When the trend in growth is up, you would always choose the very latest possible period in which to live. I'll say again, so many diseases were unbearable in that period, which are a nuisance today. And again, so many were death sentences, which no longer are.
I'll point out you can text the show and give us your opinion too. We'll talk about it in the next segment. But 617-362-1385. Obviously, if you're watching on social media or YouTube, you can post there as well and make your point about this. But I don't know. It's a fun conversation, but I'm with you. One, I think every generation has, by definition, had it easier than the last generation before them.
Well, that's not always true, Mike, but it is true when the trend line is going up.
Yeah.
And I'm talking about growth increasing here.
Right, yeah. You can make a different argument for the Great Wars and things like that. Quick break. Wall Street Watch coming up next, then we'll get to your text after that.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up. Because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead, and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Oh, markets are in positive territory in a busy day as the U.S. blockade of the Strait of Hormuz continues. Wall Street also sifting through a new batch of first quarter bank earnings. Right now, the Dow is up about 0.33%, S&P 500 up 0.2%, NASDAQ rallying over 1% or 273 points. Russell 2000 also up over 1%. 10-year Treasury yield down 1 basis point at 4.281%, and oil pulling back over 5.5%, trading right around $93 a barrel. Over to bank earnings, where JP Morgan Chase reported stronger than expected first quarter results. However, the stock is down nearly 1% after the bank lowered its net interest income guidance. Wells Fargo plunging over 6% after the firm's first quarter results failed to impress. BlackRock beat first quarter earnings and revenue estimates, sending shares up 3%. Citigroup said its profit climbed 42% from a year ago, sending shares up by about 0.5%. Outside of bank earnings, Amazon agreed to acquire satellite company Globalstar in an $11.5 billion deal that will allow its Amazon LEO satellite network to offer direct-to-device connections as it looks to compete with Elon Musk's Starlink. Amazon up by 2%, while Globalstar's stock is up by 9%. And American Airlines stock is rallying 8% after Bloomberg reported that United Airlines CEO Scott Kirby has floated a possible combination with American Airlines. I'm Tucker Silva, and that is Wall Street Watch.
Tucker, get any points or any
points,
good or bad points about
on the text
debate
line. Yes.
On the text line or elsewhere?
Couple of texts here on the text line, 617-362-1385. One text out of the 508 saying, one thing you should mention with stock market returns for millennials and boomers is it's easier now for millennials because we have low-cost index funds, which weren't a thing back in the 70s. Returns are lower now, but it's harder to screw up. Text out of the 978.
Hold on. That's a fascinating one.
Respond.
Way easier to screw up.
Well,
way less costly to invest, which is a good thing. Way easier today to screw up based on
I was using the
how
80s and
rapidly
90s,
you
though.
could make a change. Yeah, so
they were a thing. So it's always a good question. Was that actually investable in the period you're talking about? I was using the 80s and 90s, and they were investable.
Yeah.
401k plans came on the scene in 81 legally, And then, of course, they just exploded when Fidelity and others realized they could offer them to employers, quote, for free.
Yeah.
Major asset classes have been investable since 1980.
But again, with the ease of trading, the low cost of trading, all of which I think are a good thing. They're positive for capital markets, positive for liquidity. I think way easier for somebody to screw up their investments today than back in the 70s and 80s. The counterpoint would be there are far more investor protections in 2026 than there were back in the 80s.
Yeah, nobody's talking about the 70s. You had to go into Sears and open a Dean Witter account or go to E.F. Hutton downtown or something to do it. So, of course, it's easier. The texter says returns are lower or have been on average is what I said. But it's harder, he says, or she, to screw up. Your contention is, well, it might be easier to screw up.
Might be easier to screw up with how easily you can make trades and move things around, but you don't have the stuff from Boiler Room occurring quite as frequently. But there's plenty of other scams out there, so I'm not sure you can compare that. What was the next one?
Yeah,
Tucker?
another text coming out of the 978. Boomer here. The 2009 crash changed everything for me.
Yep.
Job, house, 401k all at once. Was at a bad age to recover. Okay now, but still working part-time. Most wealth tied up in real estate thanks to the COVID bump.
I would buy that argument. I think it's very compelling to say that the worst financial crisis we have seen since the Great Depression was more impactful for boomers than millennials by far. What do you think? Easy to make that contention?
Millennials liked the crash because they bought stocks more cheaply.
Yeah.
So you root for that if you're early in your savings career, so to speak. It's a little bit cynical, but it's true. You want to buy stocks more cheaply. I don't really like the setup here. I think anybody who says it's impossible to compare.
Because it's the experience of individuals.
Yeah,
trying to compare the experience of an entire generation.
And I'll say again, when you live in mortal fear of dying at 62, you live a different life than you live today.
Sure.
So and life's just far more comfortable today in so many ways. That said, it might have been a little bit easier to build wealth, but to what end? Life expectancy was shorter and quality of life was lower. Anybody alive today lives better than like Henry VIII because you're not going to die of dysentery.
Fair.
You know?
Any other points, Tucker, that people made?
One on YouTube. Again, our YouTube page is The Financial Exchange Show. Search it on YouTube. Subscribe, please. This comment says, the boomers had a guaranteed opportunity. The millennials had the lie of opportunity. What? Huh?
Guaranteed opportunity.
Let me finish.
Let him finish.
Let me start over now, Mark. The boomers had a guaranteed opportunity. The millennials had the lie of opportunity given to them. Just get a good education and you're guaranteed a good paying job, while boomers remove the pension program from retirement and introduce the 401k scam. That's on YouTube.
That's a lot. I don't think boomers had a guarantee of success. I think there are plenty of pitfalls for them too. Did millennials get lied to about the promise of an education? Yeah, maybe.
Well, you can't read history backwards. Nobody was guaranteed anything. It all happened to work out.
Yeah.
And this is why cross-generation comparisons using highly subjective criteria, it's kind of folly.
Here's a few more of the points that I'll make. 1980, life expectancy at birth in the United States, 73.6. Most recent data we have, 78.4. Life expectancy far higher, and it was higher even before that during pre-COVID.
Yeah, and that's mortality. Morbidity is another factor.
Infant mortality rates cut in half since 1980.
That's related to life expectancy.
It is, yeah. But again, 12.6 infant deaths per 1,000 births. We're now at 5.5.
Yeah,
even the real median income, right? We make all these arguments about affordability, and that's a big one that I think people are getting at but unable to express. Real household median income in the United States, $83,730 today. That compared to $60,420 back in 1984. That adjusts for inflation. So, look, I am very sympathetic to the affordability conversation today. I think housing affordability is terrible, abysmal today. I think there are some real societal issues, and the division of wealth is another one that you could speak to of, real household income, were it more normally distributed, would be a heck of a lot higher than it is now. But again, by every measure, I do think that millennials had it a little bit easier than boomers. And why would you want anything else other than that?
You can't just take one aspect of current life and say, I don't like this, I want to swap this out with 50 years ago, but I want to keep my 80-year life expectancy. I want to keep modern chemotherapy and whatever they're calling the latest variation on that. I want to keep everything I like about it, my smartphone, etc., but I just want houses to be more affordable. That's an infantile argument. You can't hold everything else constant. You got to take the whole bundle.
Agreed.
Which set of circumstances would you rather live with? 1975, where if you had like chest pains, they say, oh, it's angina. Take some nitrates, pop a few, and you're dead at 60. I hate to keep coming back to that, but I think of everybody in my family who died in the 1970s that I never really knew.
This was the part of the argument that I was obsessed with yesterday too, and I think that part is crucial. Yeah, you can make a case for some parts of society being more difficult today. I could make a really compelling case for how psychologically damaging the internet and social media has been to a certain generation, but again, you can't just pop yourself back into another part of time when, social media didn't exist, so life was better in the 1970s.
But these arguments are even more childish than that. I want to put myself back, but I want my smartphone, and I want all the conveniences, and I want to walk into an urgent care center, which did not exist 50 years. We could just go on and on about how childish these arguments are.
And I don't want my kids to die.
And plus,
that's not fun.
Even if you were right, what is the point? Oh, congratulations, you won a theoretical argument that has absolutely no relevance.
Bearing on the world.
No, it really doesn't. What is it even? Okay, millennials are the winners. Congratulations. What policy prescriptions does that translate into?
Well, we do have a poll question up on our chat on YouTube, our YouTube live stream, and the question is, we can. Ben put it up. Thank you, Ben. Question is, who had it harder, boomers or millennials? And
millennials are going to win this because they're going to find a way to vote 1,500 times. Boomers don't know how to open an incognito tab.
Yeah, weigh in with your comments on YouTube, vote in that poll. And again, if you aren't able to log on to YouTube, you can shoot us a text, 617-362-1385. But if you do go on your YouTube page, be sure to hit that subscribe button.
Let's take a quick break here. When we come back, I want to talk about something we've been talking about, the home housing season for the spring. We're off to a pretty rough start. We'll take a look at the data next.
Market insight, retirement strategies, real talk about Wall Street and economic trends. All live every day on our YouTube channel. Go to youtube.com/The Financial Exchange Show. This is The Financial Exchange.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sometimes we know what's next.
Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Our Senators Edward Markey and Elizabeth Warren and Representative Ayanna Pressley are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Stay informed and prepared for market changes and breaking business news. The Financial Exchange is live every day on YouTube. Tune in, subscribe, and keep up to date on all of our show's content on a daily basis. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the DAV of Massachusetts. Nearly 400 runners have already registered for this year's DAV 5K. The event sold out in record time last year, so head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Did you say 400?
Yes.
It's April.
Yep. Nearly 400 have registered.
Get registered. This thing's fun time, but it's April. I haven't. Oh, that's awesome. The crucial home selling season of the spring is off to a ugly start. Sales of existing homes fell 3.6% in March from February. It's at a 9-month low. The rate of home sales is we're at June of 2025 levels of home sales, and we are also right in the middle of the spring housing season. There's two forces that I think are keeping home sales down right now. One is definitely events in Iran, mortgage rates, that problem that has sparked up since early March. Interest rates shot up to the mid-6s. I think we topped 6.6% at one point. They've since come back down a little bit, but we're still well above where we were end of February when we had, the 30-year fixed rate mortgage below 6%. The other factor that I think is contributing to what we are seeing right now, 6.39 according to Mortgage News Daily. That's the average 30-year. The other factor that I think is contributing, right, if you think about home sales that actually happened in March, meaning not just under agreement, not taken off of Zillow, you're talking about a completed home sale. You had to be shopping in January and February. You were probably already rate locked. I'm not sure that the impact of higher interest rates was felt in March. I think the drop-off in sales that we saw probably had more to do with crappy weather across the country in January and February. And so if we're now hoping for some sort of makeup in April, May, and June for the rest of the spring selling season, I don't know that that's going to happen with where mortgage rates are now. I mean, maybe they come back down. We've seen the stock market, recover all of its losses since the Middle East events. But as things sit right now, I have a tough time seeing what is going to incentivize home buyers to get out there and really start making big offers if they already missed the lower interest rates of the sub 6% range. I think best case scenario is you kind of return to a home buying season of what you had last year, because that's about where interest rates are. If we take a look here, so again, I mentioned the 30-year fixed rate mortgage is sitting at 6.39%. A year ago, last April, we were sitting closer to 7. So that is a pretty good decline. So maybe you can see some uptick there from even just being 0.5% lower. But I don't know. I'm not optimistic for the people that are attached to the home transaction industry. We saw a big furniture retailer out in Western Mass go belly up. We saw a few other companies that are related to it, whether it's Home Depot or Lowe's, reporting struggling earnings. And I just don't see what is going to be the incentive to get these homes sold.
Rates are up, rounding a little bit. 0.4, 0.5% from the bottom before the conflict with Iran started. All else equal, that should sap demand, right?
Yeah.
It's pretty straightforward.
Yeah.
And to your point, March was too soon.
Right. March was not I think the
Rates
temptation is going to be
on March 1st.
Right. The temptation is going to be to say, 3.6% decline. It was just because of the war in Iran. I don't think so. I think that had everything to do with bad weather. And in fact, we're going to see continued bad home sales now because of the higher interest rates. Because if you bought a home in March, you went under agreement in January or February, and you were rate locked since probably December. So I'll be interested to see what happens next, but I'm not terribly optimistic.
I mean, how could it be otherwise? Confidence is down, gas prices are way up. You could say that's going to be fleeting.
Sure,
but it sears something in people's minds. We're a little more skittish than we were a month ago. It's natural.
Yep.
The inflation number last week, you could say that's fleeting, but it was shockingly high. Month over month change in headline inflation. So everything is sort of, stocks have stabilized.
Yeah.
Terrific. They still haven't gone anywhere for 6 months.
Yeah.
I, by the way, think that's healthy because they were so expensive.
Sure.
Going into this episode, this is the least damaging way valuations can
fix themselves.
Kind of fix themselves, or at least get into a less alarming range. So it's not surprising that home prices sales should suffer somewhat.
White House economists have somehow come up with an estimate that the United States has a shortage of 10 million houses. I don't really know what that means. I know that we underbuilt homes.
Well, they used the old trend line, and they stopped at the Great Recession and said, suppose we'd stayed on that trend line.
So basically adjusting for popopulation growth, or just
I don't
on
think
the
it's
trend
even
line?
that sophisticated. The trend line gives you a growth rate. It's just a function of time. It's you've heard the expression exponential growth. It's just a way of calculating, well, what is the growth rate implied by the exponential, if you think exponential growth is the right relationship. I'm making this too complicated. They drew a friggin' trend line, and that translates into a rate of growth.
A friggin' trend line?
Yeah, it's
technical, right?
It started in Rhode Island.
That's spelled with 2 G's?
The friggin' trend line. Just draw the friggin' trend line and extrapolate.
End it with an apostrophe.
That's exactly what they. You got a cigarette in one hand. It's called the Rhode Island trend. It's a friggin' trend line. So no, that's all they did.
Well, the Trump administration signed 2 executive orders back in March, believe it or not, directing federal agencies to reduce housing regulatory burdens, also make it easier for small banks to provide mortgages. Neither of these are going to have any impact in my mind. If you want to change the housing supply situation, you really have to do so at the local level. And nothing here is going to incentivize much at the local level, I don't think.
It is an interesting finding, though. This little trend fitting exercise, this little line fitting exercise, and then extrapolating from it, that is a shocking number. That that pace was frantic and unsustainable, and that pace was a result of a bubble. After all, this is the problem with trend lines, depending on when you want to start, depending on when you draw them from.
We've got to take a quick break, but a lot more to cover in the second hour of the Financial Exchange.
More text, too.
More market recap and more debate over the millennial versus boomer context. So stay tuned, folks. We'll be right back.
When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint donor on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
One of the most helpful things you can do for your family is to make sure that important information about your life is organized and easy to find. Hi, this is Chuck Zada from the Armstrong Advisory Group. Financial accounts, legal documents, and insurance policies are all part of a complete financial picture. When that information is scattered in different places, it can be difficult for loved ones to step in and help if a crisis occurs. Our new guide called Building Your Emergency Financial Binder will show you how to organize the most important details of your financial life, including key contacts, retirement plans, investment accounts, and insurance information. Call 800-393-4001 and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request the guide by visiting ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive. Most of the time, it's because no one nearby performs CPR. Every walker who joins HeartWalk means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Find your local HeartWalk at heartwalk.org.
Our Senators Edward Markey and Elizabeth Warren and Representative William Keating are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return. Number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Busy morning here on the Financial Exchange, mostly because I just had to run to the studio. Hope everyone is doing well here on a Tuesday. A lot being thrown at us this morning in spite of no big new news out of the Middle East. A few points that I would make so far that I just think are relevant to the moment. One would be that the S&P 500 has now surpassed where it closed on Friday, February 27th, before the U.S. began striking Iran. Quite an optimistic outlook by investors here to be bidding up stocks to that level. The blockade of the Strait of Hormuz now has entered its second day. We have oil prices as we sit right now. Quick break there. Down 5.5% on the day as, insinuations about Iran peace talks may continue. We've got the May contract for West Texas crude sitting at $93.55 per barrel. In the bond market, we've got yields coming down a little bit to 4.279% on the 10-year Treasury. And in stocks, we've got the S&P moving up 0.7%. NASDAQ's up over 1.1%. And the Dow Jones Industrial Average up about 0.5% in early trading. And again, markets seem to be accelerating on White House conjecture anyway, or rumors that U.S.-Iran peace talk deals are in discussion. That's according to reporting from CNBC and elsewhere.
Well, if oil continues where it is today, it will probably slow economic growth down significantly. I don't know if it'll tip the economy into recession. Those predictions are always fraught with danger because you can't say what's going to happen elsewhere in the economy.
Right.
But the White House understandably wants to extricate itself from this with some sort of face-saving, I guess, concessions by Iran as soon as possible. Markets recognize that. They have throughout, really. They dipped only briefly and hardly sharply in historical terms.
Yep.
And they can't wait to bounce back. Oil down today, including near-term futures contracts, suggests that the panic buying in that commodity has subsided, at least for now. So traders are understandably pricing in a swifter resolution to this maybe than seemed possible even a week ago.
Yeah, I think that's certainly what's being priced in. I don't know how rational it is, but again, I guess it is rational because who knows? I keep asking, how can you possibly price in the likelihood or unlikelihood of of a peace talk occurring and oil flowing again? You can't. There's no way to logically price that in, and so I think the best people can do is guess whether or not it's more likely than it was yesterday, and that's what seemingly investors are doing at the moment. Because there's not a whole lot that's taking up the oxygen in the room. We're not reporting massive beats on tech earnings or anything along those lines. Yeah. It's just a removal of some degree
But
of
fundamentals have been good. I mean, the economy was kind of so-so last year. No job creation, growth slowed down a lot. Tariffs pushed up underlying inflation, all that stuff. But fundamentally, nothing broke.
Yep.
And earnings have been strong.
Other updates, we are in the midst of earnings season here. Banks reporting at the moment. We will hear from Netflix later this week. We'll hear from Tesla next week before kicking into high gear with some major tech earnings the week after that. Bank earnings have been pretty solid, reporting growing revenue, earnings basically meeting or beating expectations so far from the major three that we've heard from: Wells Fargo, JP Morgan Chase, and Goldman Sachs. They are all also worth noting, taking a lot of loan losses. The way that banks operate, they estimate every quarter what their future current loans that they have on the book are going to fail at in the future, and it's a kind of a weird accounting thing that banks do especially, but they are now accounting for the largest degree of loan losses that they have been planning since the COVID pandemic broke out. They are substantially lower than when the COVID pandemic broke out, but still I think worth noting that there is some degree of concern coming from that. Just news flying at us. Other news that we have been covering: Kevin Warsh, the president's pick for the next chair of the Federal Reserve, did pass one key hurdle for his nomination. He had not submitted his financial disclosures on time last week. They delayed a hearing because of that. Those disclosures are now in and reviewed, and according to Tim Scott, the hearing will occur next week. At the same time, you still have Republican, which Republican is vowing to block his nomination?
Tillis, the chair.
Yeah, Tom Tillis is saying that he will not vote for Kevin Warsh so long as there is an ongoing investigation into Jay Powell in the Fed. So this might be much ado about nothing if he sticks to that, or if the investigation into Powell goes no further, then that could also change things. But for the time being, Jay Powell's term up next month and no confirmed Fed chair as of yet. So, again, one minor hurdle being cleared, but a lot more to come on the pick of Kevin Warsh for Federal Reserve.
I mean, the
chairperson.
seat's going to get filled. Warsh is going to be Fed chair. The question is, will he be a puppet, or will he conduct policy independently of the will and whims of other branches of government? I.e., is he going to do what Trump wants and just lower rates mindlessly, or is he going to respond to inflationary pressures coming from the oil price shock or elsewhere? So this is less interesting to me, the drama over his disclosures and when exactly Powell lets go of the reins, far less interesting than how Warsh conducts himself in the first, say, year. We'll know soon enough.
So you're not terribly, I guess, believing of the idea that anybody's going to block the nomination then? Stop tapping your pen, Mark.
What are you
Everyone
doing?
Can hear you.
You stenciling over there?
Yeah, well, I think it'll be a blip, Mike. I mean, Warsh is going to be chair eventually. The question is, will he be an independent chair? Yeah. Will he preserve the I suspect everybody who questions him in those hearings will ask, do you believe in Fed independence? How will you resist pressure from the president? That's the big question that will determine the rate of money supply creation and thus the rate of inflation over the next 10 years, which is what we care about as investors and people too. Normal, regular people, if you will, too.
Final update I want to give is what I think was the most underreported story of last week, which was the new AI system from the folks over at Anthropic. It was the latest model called Mythos, and we reported at the time that for some reason, both Fed Chair Jerome Powell and Treasury Secretary Scott Bessent called major bank executives in to have a combined meeting, thank you, about this new tool. And when it was first released, there was this announcement by Anthropic that seemed very self-serving. It was, hey, this tool is so powerful that we're not willing to release it to the public yet. We're going to go to major tech companies and others to have them try and repair bugs, because what this tool is allegedly very good at is detecting all sorts of bugs that would allow bad actors to fully take down different sites and different systems across government, private, all sorts of different areas of the economy. At the time, we kind of said, hey, this seems pretty self-serving. Maybe it's not as big a deal, because if you're Anthropic, the best PR stunt you can do is say this thing's so powerful that we're not even going to release it yet because we're worried about it. I then took a step back, because since that point in time, UK bank officials have been calling a bunch of meetings. Treasury Secretary Bessent and Chair Jerome Powell called that bank meeting as well. And I don't know, Mark, I can't think of a real situation that Bessent and Powell have publicly worked together on anything over the course of the last several years. And I think it's kind of rare to have, such two high-ranking officials going and looking at something and calling attention to something like this. So
I'm sure they have. Fed's responsible for supervision, and so they have some overlapping duties. Overlapping may not be the best way to describe it, but both are responsible for supervision.
Yeah.
So I'm sure they have collaborated, and once this is aired, they have to respond.
Yeah.
I don't know.
Maybe it's not as big a deal as it seems, but under the surface, it seems like a lot of people are very, very concerned about the severity of this new tool and what it could be used to do. And I think we're going to be talking about it more. So again, this is purely conjecture. It's just my guess at this stage, but the limited reporting we've been getting from major regulators of really important organizations has been, we're terrified of this thing, and it could be... I think what they're worried about is the ability to take down major financial institution sites and cause panic in the financial system. That's clearly, when you talk about Bessent and Powell getting together, that would be their worst case scenario that they're trying to prevent, is panic to the system, and the fact that they and others are talking about this sort of thing is just important and worth noting to me in the AI space.
What is this about? Should we keep it under wraps? Is that the point? Should it never be released? Is it too powerful? Sorry, I don't.
I mean,
I shouldn't be sarcastic.
That's the point that they're making. I think the other point they're making is they want to give these institutions a head start to go repair their own systems and use the tool to find the bugs so that somebody else doesn't, which is obviously incredibly expensive process to go and do. But again, I bring it up because I think it's worth noting, and I think it's going to be something that is pointed out several times over the next few weeks. So we will have to wait and see on this, but I didn't get heavily reported, and I think it is worth noting.
Go ahead. I was going
to
say we can't shut the whole system down every time some programmer rolls out a new.
No, precisely, we can't.
Line of code.
We can't. But if this is as dangerous as they seem to be insinuating,
well, then we're screwed because it's inevitable.
That's kind of my point.
Someone. Pardon me.
Yeah.
Oh, now I see.
Yeah.
Someone else is going to do it. It's inevitable. So
hurry up and get it patched if you can. Quick break. We're going to play some trivia here next on the Financial Exchange.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
Stay connected between shows. Follow the Financial Exchange on Instagram for daily clips on business news from New England and around the country. This is the Financial Exchange.
All right, time for trivia here on the Financial Exchange. And on this day, back in 1865, President Abraham Lincoln was shot by John Wilkes Booth during a performance at Ford's Theater. Lincoln passed away from his wound a day later. So our trivia question, what play was President Lincoln watching at the time of the assassination? Once again, what play was President Lincoln watching at the time of the assassination? Be the sixth person today to text us at 617-362-1385 with the correct answer, along with keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the sixth correct response to text us to the number 617-362-1385 with the correct answer, along with keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Is it like Book of Mormon or something?
No.
Hamilton?
Cats.
In the first hour of the show and yesterday, actually, we were talking about the age-old debate of millennials versus boomers and who had it tougher out there. And both Mark and my obvious conclusion is boomers, you people. Obviously,
well, depending on how you define tougher, Mike, right? If your
by infant
criteria,
mortality and life expectancy and by every measure that I think matters.
Forgetting
most.
that it's a stupid question and very immature to say, I just want the things I like, and then the things I don't like, I want to swap them out with the best period in history.
Sure.
Which is what that argument is. Putting all that aside, it's very difficult to answer a question like that because everybody's got different criteria.
But we do have a few more texts and comments to hear. So, Tucker, what you got for us?
Yeah, so in our YouTube chat, Financial Exchange Show on YouTube, somebody says, kind of along the lines of your point, Mike, the mere fact alone that there was a military draft makes being a boomer harder. And it's a 51-year-old male chiming in with that. I do want to mention we do have a poll question up on YouTube, which is who had it harder, boomers or millennials. Millennials leading 60-40, by the way, on that.
Woo! There you go, millennials.
Let's look at the old text line here, 617-362-1385, 978 texter. I am a millennial. I have no sympathy for those of my generation who fell into the college trap. It is no one's fault but their own that they were naive enough to think a degree in English at $40K a year was going to yield fruit. I realized the college trap myself halfway through my freshman year of college and dropped out. I am 36 years old with about $750,000 net worth, homeowner, father of four with a stay-at-home wife. I drive used cars, don't buy designer clothing. I owe everything to my work ethic and vocational high school experience. I have one more text in case you want to unless you want to respond to that one.
Got nothing.
All right, and then a texter out of the 508. One big change for student loans for millennials. The federal government took over the industry in 2010 as part of the Healthcare and Education Reconciliation Act of 2010. Now the feds are the originators of over 90% of student loans.
Yeah, and I think that does matter from the perspective of they can never be wiped out in court, and ever since the guarantee, basically what it did is guarantee the ability for anyone to get a student loan, and for some reason immediately after that happened, colleges just decided to start charging ludicrous amounts of money for college. I think it might be somehow attached to the fact that the government said we'll underwrite any dollar amount for a student loan, but who's to say for sure?
I just don't understand the point of the argument. You can't change anything.
Either. The funniest thing that I think about this entire argument is that absolutely nobody that has been texting in or talking about it at all has even mentioned Gen X. which is, I believe, your generation.
Born
Marc,
in 72, right in the middle of it.
Which is, historically,
because we don't give a crap.
The forgotten generation that doesn't give a darn about the argument.
All right, enough of the feigned pity. I mean, we've had generally good stock market returns. We had a couple good windows during which to buy homes. If those are the criteria I keep coming back to because they are.
Yeah,
objective.
They're kind of life-defining.
And I think that's what millennials mean when they lament their situation. They mean homes are really expensive, and it's very hard to achieve financial security. And that, to me, traces back to, well, you've had to buy stocks mostly when they were very expensive and homes when they were very expensive. I think that's what the typical millennial means when they argue that they've had it in some ways tougher than boomers.
Yeah.
Again, the reason it is a false choice is because you can't just excise the things you don't like about the present constellation of things and swap in and graft on top of that things that were good about previous generation. Like, you don't get to do that. You have to take the whole picture. And nobody would want to go back to 1975 and die of a heart attack at 63.
I keep going back to the same argument, right? At 18, a bunch of millennials were sometimes pushed or encouraged or given bad information about making a massive decision about their future life, which was borrowing a bunch of money for college. And it was a badly informed decision. In most cases, it still paid for itself, but that is the gripe that I feel like a lot of people are bringing up. And if you instead take the baby boomer, when they turned 18, there was a 4 in 10 chance of them getting drafted into the war. Like, what are we even comparing these things to? I'm exaggerating the odds there. That wasn't the odds of getting drafted. That was the percentage of men in that generation that served in the military. Some of them were drafted, some of them were not. But it's just not a realistic comparison. And we should not hope for the next generation to be worse off. It means that our society is going downhill if our children don't have an easier life than we did. That should be something you applaud, because it means that our society's gotten
drafts
better.
can come back. We just haven't needed one.
Correct. Yeah.
So I don't know that I appreciate the potency of that example. The draft dread does reduce quality of life.
Sure. Yeah. Markets here as we close in on the bottom of the hour remain in positive territory on hints of some additional conversations with Iran, between the Iran and U.S. about the ceasefire and continued conversations. S&P now up nearly a full percentage point. We'll take a quick break and have a full recap for you next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Sudden family emergencies can create confusion, especially when important information is scattered across different accounts. Hi, this is Mike Armstrong from the Armstrong Advisory Group. When something unexpected happens, loved ones may need quick access to legal documents or financial accounts that could affect your future. Our brand new guide is called Building Your Emergency Financial Binder. It'll help you learn how to organize the information your family may need one day. Everything from emergency contacts and identification documents to bank accounts and retirement plans. The goal is to create one clear roadmap so that people you trust can quickly find what they need if a crisis occurs. Call 800-393-4001 and request your free guide, Building Your Emergency Financial Binder. That's 800-393-4001 or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. When it comes to estate planning, many families focus on taxes, but understanding how your family will receive the assets you leave behind is just as important. Cushing & Dolan are experts in elder law and have a new guide out called How to Leave Assets to Beneficiaries. The guide explains decisions that may be problematic, such as adding a child as a joint owner on a real estate property, which could expose your assets to creditors or a possible divorce. You'll also learn how trusts can be used to help protect your assets and control when your beneficiaries receive their inheritance. Call 866-848-5699 right now and ask for your free guide called How to Leave Assets to Beneficiaries. That's 866-848-5699. Or request the guide online by visiting LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Building Your Emergency Financial Binder. Mike, when we talk about the type of information that should be in there, what kinds of things should people be including so that a loved one or family member can help to keep their finances in order?
Yeah, I think, on the financial side, it's what do I have and where is it?
And how do I get access to it?
Right, and so that can mean getting access to online passwords and things along those lines, but obviously how you share this stuff is extremely sensitive given the threat to being breached down the road. And so mainly it is, though, what is the snapshot of my financial, health, and legal life, and how do I format it in a way that people can actually interpret it?
And I think another piece there is that is also always changing. How do I let people know what changes I've made and when I've made updates to it, because I might not have the same accounts that I used to?
Right, and the guide does lay that out of, hey, how do I document changes in here, because you might not always have that old account at said financial institution. It could change, it could shift, you might retire, and keeping this thing up to date is critical. Obviously, the more stuff there is out there, the more complicated this becomes. And so as much of it as you can check off the list while you're still around and able to explain it is extremely helpful.
The guide, again, is titled Building Your Emergency Financial Binder, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or visit armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Markets are rallying with reports that the U.S. and Iran are considering a second round of peace negotiations. Wall Street's also sifting through a new batch of first quarter bank earnings. Right now, the Dow is up 0.7% or 332 points. S&P 500 up 0.9%. NASDAQ up nearly 1.5% or 334 points. Russell 2000 up 1.2%. 10-year Treasury yield down 2 basis points at 4.274%, and oil pulling back over 5.5%, trading right around $93 a barrel. As for bank earnings, J.P. Morgan Chase reported stronger than expected first quarter results. However, the stock is down nearly 0.5% after the bank lowered its net interest income guidance. Wells Fargo dropping 5% after the firm's first quarter results failed to impress. BlackRock beat first quarter earnings and revenue estimates, sending shares up over 4% now. Citigroup said its profit climbed 42% from a year ago, sending shares up over 1%. Outside of bank earnings, Amazon agreed to acquire satellite company Global Star, an $11.5 billion deal that will allow its Amazon Leo satellite network to offer direct-to-device connections as it looks to compete with Elon Musk's Starlink. Amazon is up by 3%, while Global Star's stock is up by 10%. And American Airlines stock is rallying 9% after Bloomberg reported that United Airlines CEO Scott Kirby has floated a possible combination with American Airlines. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: what play was President Lincoln watching at the time of his assassination? That would be Our American Cousin. Eric in Derry, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats, Eric. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Mark, more Americans than ever are millionaires, yet they don't feel rich. The average net worth in the United States is now over $1 million. Average isn't terribly useful. Roughly 1 in 6 families now pass the 7-figure mark. And I'm not surprised by that feeling of wealth whenever you poll Americans about what's the asset level at which they would feel wealthy. It just gets higher and higher. I will point out, when I bring up that somebody is a millionaire, they kind of, get surprised and look at me, and specifically because they don't count a lot of things that are counted when becoming a millionaire. So first of all, when they're talking about this, how much equity do you have in your home? How much do you have in your 401k or your IRAs or assets that you might not be able to touch? How much do you have in the bank accounts? Add all that stuff up and you're determining whether or not you're a millionaire. I'll point out, for other purposes, though, there's some other stuff that might be included. How much life insurance do you have? Because guess what? If you're listening to us in one of the fine states in New England, you can bet that Connecticut, Maine, Massachusetts, Rhode Island, and Vermont are all going to calculate and account for the value of your life insurance that pays into your estate after you're gone when assessing that good old estate tax on families in the New England region. And so I'm not surprised about the feeling here, but it does... 1 in 6 families now surpassing that $1 million mark.
Yeah, I think it's time to retire the millionaire label as suggestive of having achieved some level of financial independence or security. $1 million today buys what $500,000 bought at the turn of in 1999, 2000. I'll just round up here. So inflation is responsible. I don't know if anybody who was worth $500,000 25 years ago would have considered themselves to be exceptionally comfortable. I mean, we need a new reference point, Mike. Maybe it's $10 million. I don't know.
There isn't a firm threshold where you surpass and suddenly financial security becomes attainable. I will say, though, like I said before, people get surprised when I talk to them about their net worth, and they tend to poo-poo the home equity that they have or the life insurance policies that they have. And that's fine, but I remind them that, hey, now that you have crossed that threshold, there might be more planning that you need to do. If you surpassed, $1 million, is there potentially more estate planning or complex planning you need there, life insurance planning, long-term care planning, and things along those lines by these different thresholds? And so if you're ignoring that, if you're passing these thresholds and you haven't revisited your own plans, it might be time to do so. It might be time to check in and figure out, hey, does this still make sense given how much my home has appreciated over the last 5 years, given how much my 401k has gone up or my earnings have changed over the last decade? Am I still in the right place with the estate planning documents I have, the financial plan that I have, the insurance coverage that I have? Is it all still the right type of stuff to have given my changes over the course of the last? Again, home equity values are up 80% over the last 6 years. That's a big change to net worth. If you have questions along those lines and you want an overall check-in, Armstrong Advisory Group is happy to help. You can give us a ring at 800-393-4001. That's the number for the Armstrong Advisory Group, where you can check us out online too at armstrongadvisory.com. But that phone number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
In other ridiculous news of the day, United Airlines CEO has apparently pitched the idea of a tie-up with their rival American Airlines. So I didn't know this off the top of my head. I needed to go take a look. In terms of the largest North American airlines that exist out there, and we're looking at the available seat miles here is what I'm doing. That's how they factor this stuff in. United Airlines actually is in the number one spot as of 2024 with 300 billion seat miles, I think it is, followed by American, then Delta. Those three are really close to each other. Coming in at about half of those levels is Southwest Airlines, then American Airlines, and then following that is JetBlue, Alaska, Spirit, and Frontier. I don't know anything about antitrust or how these things would be judged, but I would just remind the United CEO that very recently a judge threw out the combination of JetBlue and Spirit Airlines on, concerns about antitrust. And based on 2024, if you combined those two airlines together based on seat miles, you would have made an airline that is a third the size of United. So I have no idea what makes anybody think that these two airlines combining would be a good idea for anyone whatsoever. I hope it was just a thought exercise by United Airlines rather than anything serious. I personally would be very opposed to those two airlines getting together and combining and creating the largest airline in the world by quite a bit is what it would be. So I don't know why that's even being brought up.
So what's the combined market share of the two? Did you?
It would be, in terms of this measure that I'm using, they would be representing about 600 billion U.S. seat miles, which would make them more than double Delta. It would make them larger than the next 1, 2, 3, 4, 5 airlines combined.
So I guess they'll look at it market by market and see if that. They may have to.
I mean, market by market, they're everywhere, right? Like, what market is not served by either United or American Airlines?
I don't know off the top of my head, but there are probably some.
I guess so. Yeah. So we will see where this goes. I hope that it is just a silly rumor because, again, you had the tie-up between JetBlue and Spirit get rejected. Both of those airlines are in pretty rough financial shape. I think there was a pretty compelling argument to allow that one to go through. And instead, now you're talking about the largest two out there in some sort of tie-up, which, I hesitate to come up with any way that would be good for the U.S. consumer. Let's take a quick break. When we come back, bit of Stack Roulette is next on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. Leaving assets to your family may sound simple, but you need the right plan. Cushing & Dolan's new guide is called How to Leave Assets to Beneficiaries. Protect your assets and control your family's inheritance. Call 866-848-5699 and request your free guide today. That's 866-848-5699 or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Organization can make a big difference when life takes an unexpected turn. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Having your most important information all in one place may help the people you trust handle critical financial or legal decisions if a crisis occurs. We've written a new guide called Building Your Emergency Financial Binder. In it, we offer strategies that can help you coordinate the most vital details of your life, including key contacts, legal documents, and property information. Our goal is to provide you with a clear plan for the people you trust if they ever ever need to help manage a life-altering situation. Call 800-393-4001 right now and ask for your free guide called Building Your Emergency Financial Binder. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Marc collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
From Fed decisions to market moves, watch the Financial Exchange live on X. This is the Financial Exchange.
Time for a bit of stack roulette here, Tucker, and this is the topic that just has engaged all of our listeners. So a few more texts about the millennial versus boomer debate.
Yeah.
In terms of, I don't know, financial difficulty, overall toughness. What do we got here?
Yeah, so we're actually hearing from a Gen Xer here.
There we go.
Yeah, there you go.
The new silent
guys,
generation.
I've been here for 2 hours. Like, oh, finally, somebody with a brain.
Somebody.
Jeez. So this texter's out of the 508 saying, I'm a Gen Xer, so I remember that awesome house my parents got so cheap in 1970 that millennials complain about. It was about 1,000 square feet, and there were 6 of us. There was 1 bathroom and 3 bedrooms. Oh, and we had 1 TV. The boomers had it worse than myself or millennials.
The driveway was somehow uphill both ways.
No AC and a 50-amp electrical service on that 1970s house.
No, but listen to what he's writing, though. It is absolutely true. Your TV was 21 inches, and you had a crowd around it. Yep. Somehow we all watched it in a normal-sized family room, but
get up to change the
didn't
channel.
have AC in the bedrooms. Yep. I mean,
100%.
You just said fans.
Later. Those came later. Yeah. Those came like when we
most of Mark's life, he just had to wave his hand in front of his face.
Yeah, we had.
That's why he's got a bad wrist.
We had a paper fan. We had a peacock and.
Again, Rhode Island's a different place. Yeah. What? Any other text for us, Tucker?
No.
No, that was it? Okay. All right.
But
thank you, Gen X, for texting
doesn't that guy
in.
personify Gen X, though?
Yeah.
He's funny. He's a little bit indifferent.
Yeah.
We generally don't
The poll
complain.
Thinks millennials, 58%, saying millennials had it harder than boomers.
And
on
how
our
do you
YouTube
vote
poll.
on the poll again?
Go to YouTube, our live stream.
Okay.
It'll be there all day, and you can participate.
But of course, that's what. If your biggest challenge was affording a home, of course. If your biggest challenge was surviving a heart event, you will feel differently. In 20 years, you'll be saying, oh my God, I'm so glad I live in the mid-21st century and not in 1970.
What do you have for us for Stack Roulette, Mark?
Would you guys buy a car from Amazon?
Yes.
Okay, so walk me through that, Tucker, because would you buy a car without seeing it in person first?
Yes.
Okay.
Yeah,
okay, because Amazon is context is that Amazon is expanding. There is a link to Amazon Autos now on your Amazon
I will say
landing
this.
page.
If I drive a sedan, I've always drove a sedan. I know Hondas, I know Toyotas, I know Volkswagen. If I were to venture out and be like, hey, my commute's going down, maybe I'm going to get a pickup truck, then I'd want to try one out.
Yeah,
But
okay.
if it's a VW or Honda, something I'm used to, no, I'll order on Amazon. I know what I'm getting.
But I would assume for you to do so, you would want some price, a deal, right? Or are you just saying they don't have to? I'll pay
I just don't
more
want to
to
deal with
shop
the
on
hassle.
Amazon.
I don't want to deal with the hassle.
Yeah,
and I know they're going to price it aggressively.
Well, if you're in the market for a Kia, Mazda, Subaru, Chevrolet, or Jeep.
Are these new, used, both? Can you buy
both?
I would assume both.
Yeah, both.
Well,
I mean,
that's
dealers qualify or apply to have some sort of relationship and put their listings there.
Yeah, new, used, certified pre-owned, all there on Amazon. Wow.
And so, what is it? Carvana or Auto Trader, for example, is just a listing website of a bunch of dealers' used vehicles that are out there. They sometimes list new ones,
this is
too.
a similar model here.
So they're just doing the same. They're not taking inventory
dealerships.
of vehicles.
No, these are participating. It's just a conduit.
Yeah, so Mike, I'm
Intermediary,
looking
whatever.
through all the used cars on Amazon, and they're all different dealerships in the area listed.
That's just not that exciting to me.
But it might be exciting to somebody, and on the margin, it doesn't cost a lot.
I mean, it's
You've
bad
got the
news. It's bad news for Auto Trader. It's bad news for Car Gurus and a few of those other companies that.
There's
do
probably
the
room for
exact same
multiple
thing.
models here.
Yeah, most certainly. But once Amazon enters a market, it kind of destroys a bunch of stuff. If you want to entice me, I want what I would like. What I would like is the ability for Amazon to strike some deals with the manufacturers and avoid the dealerships. Because that's the whole thing. Tucker doesn't want to deal with the dealership. This doesn't
You're
fix
not
that.
dealing with a dealership.
You are.
Okay,
right?
you're
'Cause
buying,
they're all
but
listed
when you
here.
say deal with, you mean the ritual and the theater and
going in.
all the crap.
Let me
you're,
rub the
you're
numbers. Hey,
bypassing.
I'll be right back. You want some water or coffee? Yeah. No, I don't want to do that. Sit there for 8 hours. Stupid.
Okay.
I'm
not
this
sure
is
Amazon's.
progress.
So
this is
I'm
good.
This does remove all that unpleasantness.
I'm not sure Amazon's bringing much to the table here. To me, this is just duplicating.
Maybe
what
they're
Auto
just
Trader does.
dipping their toes in the water. They're trying it out.
Yeah.
But you could have
Amazon
a participating dealer on both platforms. Presumably, the price would be the same.
Yeah, on both
Question
platforms.
is,
And
do
the
you
question
wanna-
is the buying process any different?
Is the financing different?
Right. Is there any different feature that Amazon's going to offer me by finding me that new Kia on their site versus Auto Trader? Because if not, again, it might be bad news for Auto Trader, but I don't think it really matters. We'll see.
I think today, no, there's probably nothing different. But again, I think they're just getting into it.
let me
and
buy it with my
they'll
Amazon
figure it
Visa.
out. They'll figure it out.
Yeah, I mean, Amazon always. They don't always figure out. They do. What they do is they throw everything at the wall, and 80% of them are terrible ideas, and then 20% of them actually end up working and being these massive business successes. So that's kind of their MO, which is why I'm kind of discounting it. When Apple comes up with something, they tend to have a lot of hits. When Amazon does, it's half of them are garbage, and we just discontinue it after a few years. But we'll see where this one goes.
This is my first Stack Roulette that's ever generated follow-up conversation.
Look at you. Look at
I'm
this guy.
savory. It's a weird feeling.
It took you 3 years.
Staying in the auto industry, bargain car hunters are driving the next wave of U.S. EV sales. So this is definitely something that I noticed. My most recent car purchase, my wife was starting a new commute, and we needed another car. We have 2 gas-powered cars, and we said, yeah, I've driven an EV before. They're fun to drive. It'd be cool to plug it in at the house. We've got plenty of electricity service to be able to do it. Let's go for it. The available inventory of electric vehicles, whether they were Chevys, we looked at Chevys, Hyundais, and Fords, and there were a ton of them available, as well as very big incentives available for the purchase of these things. Well, yeah, maybe not anymore with gas prices surging. So I guess that's the big question is, are they still so readily available and so heavily discounted? But when I was purchasing back in January, I believe it was, the just flood of these vehicles that they seemingly could not sell over the course of the last 2 years and have now pivoted away from has been pretty substantial. That would be my only concern these days is, are these manufacturers going to pivot away from the vehicle they just sold me, and will it be difficult to service going forward? That's a bit of an interesting question. But yeah, bargain hunters, not only for the gas prices now, but sales of these electric vehicles declined by 27% in the first 3 months of the year. And used models surged by 20% during the first quarter of 2025. So it is clearly a bit of a mismatch in terms of supply and demand, but I've personally been quite happy with it. Not having to go to the gas station and fill the thing up, plugging it at home. I'm not going to say that it's this incredible cost savings, but yeah, it's been quite the experience.
Oh, I meant to tell you this. I was filling up the other day, and a lady filling up her Volvo, she looks at me and she goes, "I just spent $96 to fill up my tank."
Bet you did.
$96.
Well,
and then she just drove away.
Was she putting the 93 in?
Yeah, of course, yeah.
Did she think you worked there?
No. I was just at the next pump, and she was like, "You get a load of this? Jeez. See you later."
She just thought Tucker was cute.
Probably.
That is all the time we have for this edition.
He's seeing her again later.
Wink.
Tucker's hanging out at the gas
They
station
meet
now.
at the gas station every Tuesday.
Yeah.
And NASDAQ up 1 2/3%. S&P up a full percentage point. The Dow Jones Industrial Average up 2/3%. That is all the time we have for today. We will be back at it tomorrow, maybe a little bit less goofy then. Have a great rest of your day, and stay tuned, folks.